Hello, everybody, and welcome to Afternoon Market Action. My name is Glenn.
My name is Patrick France.
And I didn't give my whole name. Why'd you have to go give your whole name? All right, fine. My name is Glenn Edward Tompkins Jr. How about that? All right. And we're glad to have you here. This is our dual live stream we do every week called Afternoon Market Action. We talk about what's going on in the market. We look at some stocks. We do a lot of different things. We answer a lot of questions. And it's a good place to have, a good conversation about, as investors, what we need to do, what we not need to do, what ideas are out there that we can all take advantage of. If you're brand new to the channel, please take a moment right now to hit the subscribe button.
And also turn on the notifications by clicking on that bell icon as well.
Oh.
There you go.
Wow.
Trying to help you out,
Joey.
Grandpa.
Wow. Joey's here too. Say hi, Joey.
Hi, Joey.
All right. So do those things. And if you like what we do here, don't forget to take a second right now, share this live link with people on your social circles. If you can hear us, let us know in the chat, preferably with VV Nation, and let us know where you are tuning in from. We do have the Facebook people here. I've got Fardine saying, let's go. Way to go. Okay, we got it. Joy says, love my VV Nation. I love that. And we have access to people all over the world. That's the beautiful thing. Michael is here from San Diego. Wow. I don't know what that is except for vacation rental. Nice to see you here. Tyree is
Florida
here.
Keys.
Is that what it says? Florida Keys? Okay, fine. I can't read this stuff. I'm an old dude. I mean, I can't keep up with all.
We got James coming in from right down the road in Winston-Salem.
There you go.
Daryl War Eagle.
Oh man, Alabama. Oh, that's not what you like, is it?
War Eagle.
No, man. Listen. Got Albuquerque all over the place. All right, so excuse me. Thank you guys for chiming in on where you're all coming from. We got a lot to cover today. And again, hopefully we're going to spur up some great conversation as well, from the perspective of, as investors, what do we do right now? The news is just still all bad. It's still all bad. But, I think that my partner over here in crime has a couple of different takes on a couple of different things that could spur up, again, some great conversation as well. All good if I unplug my headphones. No, don't. Well, I don't know. Hi, gentlemen from Montreal, South Shore, Canada. Man, is it still cold up in Canada? Do they have any summer at all in Canada?
They do. That's like saying, do they have summer in like Maine, or do they have summer in Michigan?
I don't know. I don't think they have summer in Michigan or Maine. All right. So with that, let's just get into, Joey, take me into which one do I need? I need to go into the software first. All right. So what we're going to do is we're going to bring up the market timing graph. I didn't want that one yet. I'm going to bring up a market timing graph, and I'm going to put it on a longer term view of 3 months. Now, one of the things that you'll see, and Patrick is really good at this. Go ahead, finish drawing the wedge, Patrick. Is that our market, or our VectorVest composite, is currently sitting in a wedge. All right.
Wait.
What? You see?
What wedge did I draw? What wedge do you want me to draw?
Where's the upper side of this? You don't see the wedge?
Well, if you're going off that, yeah. Okay.
All right. That's what I'm looking at. We talked about it. Well, we didn't talk about it. But there's the wedge.
Like Sonny's reply.
Yeah, we didn't really talk about it, and let's put that up. So we're in a wedge, and look at, I'll let you talk. I know you're a wedge kind of guy. I look at it as just a level of, I don't want to call it capitulation, but consolidation. Mm-hmm. Let's start off with you first. What do you see in looking? And this is a 3-month view of our VectorVest composite. What do you see?
I see somebody getting a little trigger happy with the freehand lines.
Do you want to redraw it? No. You want to flap your jibs. You want to redraw it?
On your man.
Oh.
I didn't see anything. I mean, yeah, realistically, looking at that wedge, you are touching the top part. As Glenn said earlier, it is a consolidation pattern. And so basically, the best way to describe it is like a coil or a spring that you're tightening and tightening, and it's getting smaller and smaller until it runs out of room, and then it finally explodes one way or the other. Similar situation, what we're seeing here. And right now, we are touching the upper part of the wedge, but if we can break out of that, that would show that most likely, as long as we get follow through from that, we see an explosive move higher. Obviously, we want to see strong volume on that as well. But if it breaks down to the lower part of the wedge, then that would indicate, short term or at least momentum picking up back to the downside, and that this downturn is still not over.
Okay.
Basically, the best way to consider it is it's what it's made of is two trend lines. So you're looking at the downtrend here, but a new uptrend here, and you're seeing which one's going to win pretty much.
Interesting what I see, of course, the wedge, but yesterday's action, good action, stopped right at the trend line, and we're getting followed through from that pullback. We still got a little bit of time to see if the market still has some downside. And if it does, if it breaks through the lower side, the market should be poised to move lower. We'll see. But there's no doubt that the market's been going higher. My thing, and I've been saying it for a while, is what good news is there for continuation of the market to move higher? And I don't know if there's any good news. I still think inflation is an issue. Supply issues is an issue. There's nothing good in the market to substantiate a move to the upside at this time. And that for me is the biggest thing. Now, why is the market moving higher? Well, the market's gotten beaten up. And I think big money is saying stocks are enough on sale right now that we need to pick them up. Is that enough to keep markets moving higher? And not only are we right at that trend line, what are we doing? We're still moving a little higher, but a lot of just trying to level out and move sideways. So we'll see what's going on. All right.
So, I mean, one take could be also that, everybody's been worried about entering into a recession. Everybody's been claiming doom and gloom. But, one of the things people have to remember is that not every recession is 2007, 2008, or the Great Depression style of recession. So it could have been overdrawn or overextended because of fear in the market. So you could see, revision or coming back to the mean there.
Yeah, I still think with the inflation being high, Janet Yellen said yesterday, and I was glad to hear it, she confirmed what your Uncle Glenn has been saying for the longest time. She says, well, as far as using the word transitory, we should have used another phrase. Absolutely, you should have used another phrase. But Uncle Glenn's been saying that it ain't been transitory all this time. I'm glad to hear that she backed off in front of Congress. And she says that inflation is high, and she doesn't look at it. She's hoping that it's going to get better. She says it's going to be high, but she's hoping. And this is the Treasury Secretary saying that she's hoping that it's going to get better. So we'll see. All right. So, but that was very interesting in that she publicly pulled back on the statement of being transitory inflation. I think that as long as you're putting money in the economy, you're putting it and you're putting it and you're putting it, $1.9 trillion, high prices were going to come. Inflation was going to come. And you know what's tricky? And tell me if you think I'm wrong, Patrick. How do the heads of monetary policy, of Treasury stuff, how did they not see that was going to come?
I mean, it was always a possibility, but obviously you don't want to try to panic people, and you want to try to paint the rosiest picture out there. So you go with the best of the modeling, and that's what you project on, even if that's not the most, or that's not the one with the highest probability of what's to come.
But don't
especially
you think
when you look at when all the Fed members dumped all their stocks, they had to keep things elevated because it started dumping already in November. They needed to keep investor confidence high and everything looking okay while they exited their positions. So
I think that they need to be more upfront with investors. Well, what's really, I know, and that's probably another story for another time.
I mean, you do that though, and then then basically if you do that, you're saying, hey, we have no control of what we're doing. We're not really the best at doing what we say we're doing.
Well, maybe they're not. Maybe that's just being truthful.
Yeah, and then they get fired. So they want to keep their jobs.
All right. Someone pointed out with today's candle, right at that level of the upper support, we got a little bearish harami. We had a little bearish harami on Thursday, right? Friday. Friday, we had a bearish harami as well. Didn't work out to confirm it. We got another bearish harami, but this time it's right at the upper level of the wedge, or the upper level of the level of resistance on the wedge. Could it hold more credence? Well, we'll see. Glenn, Disney has that Truthful movie coming out in theater near you soon. I hear you. I hear you, Kirby. I hear you, Kirby. All right. And somebody says cut the spending. Listen, there's a lot of things that could have been done differently that were not. But right now, we got to deal with what we got and go forward with that. All right. Here we go. Let's start getting into our stories. I don't do it from here, right?
So Dave, just to answer your question, he says, don't you go to jail for that? Isn't that insider trading? I mean, you would think that is, but there's laws that they've passed to make sure that they don't get in trouble for it. And they're not a government agency. They're an individual company. So,
and that's been a big bone of contention of people for the longest time, is that they're really not governed or regulated.
They have nobody regulating, no oversight. So, I mean, when you have no oversight and you're self-regulated,
you can do whatever the heck you want to do. Yeah, it's true. All right, so let's start off with what's going on in the market. The Atlanta Fed signals GDP could slow to 0.9 for quarter two near recession. And Patrick's going to bring up something that could go against what that is. So I think that the overall prediction, if you want to call it, is that GDP is going to go down for a second quarter. And if that happens, we can officially say that we're in a recession. Now, here's another story on Yahoo. Recession.
Well, so let's take that though real quick. 0.9% is still positive. So from my understanding, it has to be a negative growth over that quarter. So GDP, if it's in the positive at 0.9%, that's not two consecutive negative growth quarters.
So it says near recession.
Yeah, near recession, not at recession territory though. So that kind of backs up what we're going to be talking about next.
All right, so now I'm going to go to another story in Yahoo. This was done yesterday. Recession will be hard to avoid as stagflation risks rise, and that's the World Bank. If you want to know the difference between a recession, stagflation, disinflation, I did a video not too long about it, and if Joey can find it, I did a video on all of those different phrases and what's needed for any of those things to happen on YouTube. So this is a different story. So that's the beautiful thing about looking at these individual stories, is to see what different people think. And then Patrick and I are going to try to put, whether it's a good story, whether it's a bad story, looking at the VectorVest software to help us as well. Then become a member of Congress or Fed. Uh-oh. What are y'all talking about? Don't you
I was just replying back to somebody.
Sigh. All right. So, and now here's another one. Inflation. I don't think the Fed can solve it alone. Now, that's going to be an interesting story. But the Fed hiking
this all along.
Say again?
Fed really has nothing that they can do to fix the inflation aspect.
Well, they do. The only thing that they do, that's just the inflation side of it, not the supply side of it, which is adding to inflation.
Rising commodity prices.
But that's
supply chain issues are causing inflation.
Well, what else is, when you say it again, what and what?
Supply
commodity
chain
prices
and rising commodity prices.
All right. So what is the Fed's only tool? The Fed's only got one tool, huh?
Job creation.
No, what's all right, define. What's their other tool?
And they're doing their other tool.
raising interest rates.
I said
That,
interest rates first.
oh, did you? I didn't hear
Yeah.
you. All right. But that's their main tool that they have to stave off inflation. And that's the tool that when inflation comes around that they always run to do because that's what they can do. But you're right as far as the supply issues. The supply issues outside of the Fed could be addressed a little bit. And I do say a little bit because we got our own oil that we can drill for that could help bring oil prices down, which could bring gas prices down. But that's another story for another time as well, because that becomes more political than it becomes economical. All right. And I still think that with it being so hard to get oil is still a good place to be as far as from a stock perspective. All right. And it sucks that we're playing on the hurt of Americans because gas prices are going up, but oil stocks, and for the most part, gas stocks are still, when I say gas, natural gas stocks, are still a good place to have your money. But if you play natural gas, it's a lot more volatile than the oil prices in the play. But nonetheless, I still think that that's where the money needs to be. And Patrick is right. You know, the Fed, there's only but so much the Fed can do. And, you know, even from a jobs perspective, how does the Fed generate jobs? They don't. They just monitor what's going on with the jobs or try to make the economy so that the jobs are there. And we saw that, you know, the market is still growing, is still moving from a jobs perspective because the jobs number came out that for the month of May, 390,000 new jobs were created. But if you look from week to week, you look at the unemployment number, you listen to people, it's tough to still get a job. So there's a lot of back and forth when it comes down to this from a job perspective. Right?
Well, it's not tough to get a job. It's tough to get a job that you actually want.
Or it's tough to get a job that keeps up with inflation. And wages are still overall the highest they've been for a lot of years. But even with that, the only reason why wages are going up is because inflation rates are going up. Inflation is going up. People, employers are forced to pay higher rates to get people to come in.
Oh, so speaking of that, I took a picture last week, I think it was. I was driving by the Wendy's up in Mooresville.
Yeah.
And I saw
Which
the
one?
sign right off of 36.
Okay.
And there's a sign now hiring up to $14 an hour, 300 sign-on pay, and it has like a number to text to start applying for that job.
Who thought that would ever happen for a fast food place?
Yeah.
You know.
So once again, I stand by my statement that it's not hard finding a job. It's hard finding a job that you actually want to do.
Okay. How many months before
difference.
the market turns to a bull market again?
Technically, we're still in a bull market because
earnings are still going to companies are still making money. We've never gotten out of a bull market. We have a bear run, but in a current bull market. And VectorVest has kept us in that bull market and if you're a VectorVest subscriber, on the timing section every Friday, we go through the earnings update. Every Friday, we update you on what's going on in the market from a bull or bear market scenario. We do that every Friday. If you're not a subscriber to the VectorVest software, 99 cents gets you access to the VectorVest software for 30 days. 99 cents for 30 days. Go to www.vectorvest.com/YT. You want what's going on in the market, excuse me, every Friday, you need to do that. 30 days, 99 cents. All right. Need VectorVest next day for answers. Yeah, Jim is still working on that.
We're not supposed to tell anybody about that, guys. Shh. Everybody's got to keep that on a hush.
Guy King says, inflation causes shortages because people start hoarding, and short supply causes more inflation and an endless loop of bad juju. You know,
whoa, Scott King, I am not emptying my closet full of toilet paper. I'm keeping it all there.
Wow, Patrick, you ain't supposed to tell them that either. Wow. Holy smokes. Now, Gold Cross says the government doesn't create jobs. it's the private sector. And that's where I was trying to get to, is how does the Fed really create the jobs? That the private sector creates jobs. The American entrepreneurial spirit will heal our awesome society with stable energy prices. And you want to know why a lot of people are not going back to work? I think that during COVID, we probably, and I need to look this up, I think we had the biggest jump in entrepreneurial businesses probably in like forever. Because a lot of people during COVID said, forget this. I don't want to go work for somebody. I'm going to start up my own business. And I think, I'm probably going to look into that as a story, or maybe you should look into that as a story, because I'm curious to know how many new businesses were created during COVID.
Well, a lot of business shut down. But also to address that, saying the government doesn't create jobs, the government's one of the biggest job creators in this country. The government is the reason why we spend, based off the Keynesian policies and their formulas and theories that they go off of. Government is a huge portion of what makes up our economy. So if you're going to follow what the government's doing, it definitely does count towards job numbers and everything. So
when you say create jobs, right?
Yeah.
Tell me what I'm missing from a creation perspective.
What do you mean?
How does the government create the jobs?
I mean,
look at all. I think it is the private sector.
They need people to fill positions for that.
For what?
I mean, the Department of Agriculture, people have roles in that job, or people have roles in that department that need done. IRS, they need people or accountants to go through that stuff. Yeah.
So when we talk about creating jobs, we talk about creating jobs from businesses that make money. No government entity makes money. None.
Yeah, they use taxpayer dollars to pay for all of it. And then they also have PAL printing off cash for them so they can print, or they can keep everybody employed.
So let's go back to that. Is it the government that creates jobs, or is it the private sector that creates jobs?
It's the government. Government has jobs that, what is a politician? It's a job. What's a Congress member? A job.
You really going to call that a job, or is that?
I mean, by definition, it's technically considered a job.
Okay.
But like, I know I had a good friend growing up in high school. His mom was the head of Department of what was it? Of tourism or something like that. So, from all the state of West Virginia, she covered all the stuff for tourism, for advertising and everything, putting that all together every year.
But now you look at the people who get the government jobs, who pays them? The taxpayer, right?
Yeah.
So is that really a job?
Yeah.
Okay. I'm just listen. I'm just trying to walk through this. Is it really a job, or the employers like an Amazon hiring people? That's not taxpayer money. That
doesn't count as a government job.
Yeah. All right. I think we can agree to disagree. And I'm not vehemently disagreeing. I guess I am just trying to justify the word job and what it really means, because you're right. The government needs all of these people to work, but the taxpayer pays these people. Whereas the private sector, the private sector, that's not our money. The private sector pays those people. Those are
where do they get their money from? From consumers. Your money and my money that goes to them, they use that money to pay for their employees. It's the same thing. I don't see why this is so hard to grasp. And if you look at the jobs numbers, the government jobs that they put on there to get people to join in for these government positions are included in the jobs numbers. If they weren't actual jobs, they wouldn't be included in the jobs numbers.
All right.
I don't see why.
No, I mean, 40 years.
It's literally the definition of it.
Well, and Dave says 40 years in the Department of Defense civil service. It was a real job. All right. So I hear you. We, the people, create jobs by purchasing goods and services. Real inflation is over 20%. No, and gold calls Pat ain't toxic. Patrick has given his argument. That doesn't make him toxic. I don't think that makes him toxic in any way, shape, form, or fashion. This is just a conversation, folks. All right, that's all this is. This is just a whatever. And JPD, I know everybody's entitled, but we got to all be nice to everybody too. All right. All this was conversation. Nothing more, nothing less. I was with the Department of Defense too. All right. And still am a United States Marine. I got paid, but I got paid off of taxpayers' money. All right. And it was real money. Don't get me wrong. It was real money.
And it's okay if they want to come at me. I mean, just because not everybody's a good trader. I mean, you have
Don't
to blame
don't
somebody.
don't you feed into it either. Don't do that.
Everybody needs the boogie monster to blame. So if they want to blame me, that's fine. I'll take it. Just some people on the internet. I'm okay
this was
with
nothing.
That.
This was nothing more but a conversation. All right, and that's what we do here, folks. You know, that's a good thing. All right, and let's get up to oil and gas. This is my story. The first three stories were stories that we could both talk about. I'm on the path still. Oil is still the good place to have your money. Shell okays Project Down Under. CVX gets Venezuela reprieve. So interesting story. On the news front, London-based oil biggie Shell gave the go-ahead to develop the Crux gas field in Western Australia, while U.S. peer Chevron got its Venezuela license renewed by the Biden administration or government. Developments associated with CVE, another hotly traded stock in that space, Phillips 66 PDC, also made it to the headlines. I still think that with oil the way it is, it's still tough to get. I think it's a little easier for us to get if we really wanted to go get it. But with that being said, I still think that oil is a good place to have your money. Oil stocks have been rocking and rolling. Dan says oil, gas, uranium, and shipping. I'm going to believe you on the oil and gas and the shipping. Uranium, I just did a story not too long ago on uranium stocks. But since I did that story, I've been tracking a portfolio of those stocks. They've been getting smoked. And they've been getting smoked. And I hate you, Mark. I so hate you, Mark. I'm going to put this up here. Because those two stocks that Mark is talking about are stocks that I've talked about heavily, TNXP, CTRM. I've lost money on several picks here. Those are two of my stocks. But overall, he's way up. I don't blame Patrick, though. It was Glenn's fault. Thank you, Mark. Thank you. I appreciate that, Mark. But I know that Mark is messing. So I still think that oil is a good place to be. We'll talk about a stock or two that I'm looking at in that space. Now, the next one, in talking about oil, Patrick's got another side of the coin. Patrick, here's your story. Talk about it.
All right. Hold on. I got to close that. There we go. All right. So this is an article I found last night. And everybody, this is kind of part of the reason why I believe, the whole fear of global or U.S. going into recession to negative GDP quarters may be overblown. Talking about something that I haven't seen anybody else talk about. Glenn and I have talked about it week in and week out about how the U.S. needs to start producing oil if we're going to, try to actually help out with the situation. Cutting gas taxes, any of those crazy ideas aren't going to be helpful. Only way to really help is by producing oil, using the oil that we have here. So this is something that I found that was kind of interesting. Trade deficit drops 19% to $87 billion in April, and exports are increasing 3.5%, whereas imports are declining 3.4%. So when you get down into the nitty-gritty of the article, it talks about what exports are increasing. Well, the United States is actually exporting more than I've seen anybody talk about, or more than most people would expect. Well,
keep going.
Your face showed up. Thank you, Mark.
Thank you, Mark.
Where is it? Let's come down. Got to find where it was. I can't use the mouse there, or I can't use the wheel. Where was it?
All right, there you go. You should have it.
Trying to get down to it. Here we go. So goods and services increased 3.5% to an all-time high, led by shipments of industrial supplies and materials. But then petroleum exports increased to a record of $27.2 billion from $26.3 billion in March. Food exports were also highest on record, with the nation selling $2.1 billion worth more worth of soybeans. Capital goods exports increased $1.2 billion. But mainly we're seeing that if we come down here, oil is actually the U.S. is actually net positive on oil now, because, well, with this reading here, I'm trying to get to where it talks about it to give the exact numbers for everybody. At 25.2 billion petroleum imports were the highest since October 2014. With the United States now a net exporter of oil, the impact of this trade deficit was neutral. And so basically, it goes further on, but what it's talking about is that because we're slightly higher on the exports over imports, that cuts that deficit or that impact down and could actually boost GDP by roughly 2% if the numbers are good enough. So this could be, that catalyst that not really a whole lot of people are talking about yet. Everybody keeps saying, oh, we're going to be hitting a recession after this quarter. We're already in a recession, this and that, doom and gloom. Well, if we don't have 2 consecutive negative GDP quarters, then technically we're not in a recession yet. And if we're actually starting to export goods or food products, also oil, that could help reduce that deficit there and help actually have a positive GDP for this quarter, therefore negating that potential for a recession. So I thought this was interesting, something I haven't really seen anybody else talking about, and giving a different light on it, because up until I read this, I was on the same page of saying, yeah, markets are going to go into another 2008 recession where, we're going to have the whole entire globe having issues for the next few years. Things are really bad. But then this kind of sheds a little bit of positive light on it, and kind of makes it feel more like things are a little bit more overblown than what they appear to be. And, we could see a bounce back in the near future. If we don't hit that recession number, if we don't get that negative GDP and all of a sudden the talks are off about, oh, recession's right around the corner, we could see the market start to take off a little bit. That could be that positive note that, people are looking for to feel a little bit more comfortable to start entering back into the market to the upside. So I thought this was interesting and something that, haven't really mentioned or haven't really seen anybody talking about. So wanted to bring it to our attention or bring it up today here for you.
All right. So I do like the story. I'm curious why nobody else is talking about it. Number one. Number two, where it says that we're a net exporter. How?
Because right now we're importing 25.2 billion right here. And then exports, where was it? We're exporting 27.2. So we're total net positive of $2 billion.
Right, if that's the case and we've got more oil to export than we are to import, why are oil prices still high?
Because we're exporting it to everywhere else, same as soybeans. We're trying to help out with what's going on overseas in Europe right now. We're exporting, food, that kind of, or commodities there with that. Any extras we're sending that way and trying to help reduce that. So that way, Europe doesn't hit that recession number. Because if one of them does, then kind of like the domino effect. Once one starts falling, they all start falling.
And I'm with that. So we export 27. If we're exporting 27 and importing 25, we averaging 94.99. As a matter of fact, let's go back to the program. Why did that didn't happen? Oh, I need to do it over here. Program. I want to see something. So, what'd I do? I asked what to do. Sigh.
You don't have to push that.
Sigh. I hate you. I want to see something. I need something that shows me what the price of a barrel of oil. I don't know if this is it, the commodities. Is that it? Do you know? I know I use it, but is that saying that it's 91.43 a barrel? I don't think that's right. 1 year, because it says we've had higher than $91 a barrel.
Yeah, I don't think
Nonetheless, it's saying, so let's just take what you're saying. Nonetheless, even with that, all right, oil is still hitting a new 1-year high. So if we were a net exporter, and I guess, Patrick, I'm just looking at the story. If we were a net exporter, that means we got more to send out than we need to take in. Why is that not affecting the USO or this ticker symbol to the downside? And that's the only question I'm asking, bro. And
I mean, because if you look at how economies work in the global economy now, and this is something, I learned in school a long time ago, and it doesn't really make a whole lot of sense from just common sense perspective. There's a lot of numbers behind it that you'd have to do the math and all that to make it really understandable. But in trying to explain it simply here, even though we produce a lot of oil, or some country produces a lot of a good, you can sell it for a higher cost somewhere else. So instead of selling it to a buyer here that's willing to pay less for it because they're using, let's say, US dollars, or if you can get a better pricing just from, when you account for the exchange rate, you could get better pricing that way, or you have a higher potential buyer somewhere else, then you sell it to the highest buyer. So therefore, to gain maximum profit potential on that, that's why you see a lot of countries that even though they make it, they don't actually use their own, or they don't use their own products. You'll see countries where two different countries, one makes one thing, one makes good. Let's say one makes good A, one makes good B. They also have smaller industries that make the other good as well, but they make good A, and then they sell it to country B the other country who makes good B, and they flop them basically, and they use the other country's product instead of their own country's, just because they can have
they can make more money
that way.
All right,
it increases profit margins.
I got you. All right. So again, it was just, and everybody's putting in the numbers. Harry says CNBC said this morning it's at 122 per barrel. Kevin says it's at 121. Dave says 119. Nonetheless, it's still high. And by looking at this story, now I understand, Joey, what I need to do. And looking at this story, man, I would just think that if we're that much better from out-of-pocket perspective, that should help us. We'll see what happens with it, right? But the big thing is, Patrick's right. I ain't seen a story about this anywhere. Nobody's talking about it. And even if the trade on track to add to GDP growth in the second quarter, I said to Patrick, is it a little bit too little, too late? Once the second quarter is done, which is what, the end of this month, right?
I think so, yeah.
The end of this month.
I'm not even going to get into the political aspects of having higher oil prices does.
Yeah, I hear you on that too.
I think everybody can make up their own decision on that one. But as well, coming into an election year, or coming into an election season, if everybody's mind is on, we just entered a fresh recession, what's that going to do at the polls?
Yeah. So there is a political side about it, and again, we won't get into it, but I think that everybody in the room knows that there's a political side to it too. Mm-hmm. I think everybody does. Now, CPI report comes out Friday the 10th. Should tell us if we're in a recession. No, that just tells us if inflation is getting higher or lower over the last report.
And that tells us whether or not the Fed's going to keep jacking up rates, or if they're going to start how much they're going to jack up rates.
By the end of the month, I think it's the GDP. The GDP comes out every quarter. So I think by the end of the month, when the GDP number comes out, that will tell us from a technical, air quotes, from a technical standpoint, if we're in a recession.
Dan also brought this up about natural gas. Natural gas is in here. Let's see if I can find it real quickly. I don't want to spend too much more time on it since we've been talking about it for a while.
And Dan, natural gas is freaking volatile. It could be up bigly one day and down tremendously bigly the next day. but it's a good place to if you time it right, you can make a lot of money in UNG. All right. But it's so much more volatile on a price basis than oil is. Recession in 2023, Justin, that's my opinion. But if the GDP number doesn't show a decline for a second quarter, like Patrick said, could be a possibility, then maybe not. All right. And John says natural gas is referred to as the widowmaker. I don't disagree with that, man. It is, because it could go up really nicely one day and be deadly down the next day.
Oh, so one other thing that comes in that I thought was interesting.
Okay.
Import of goods and services fell 3.4%, because companies have been, having issues stocking shelves and getting inventory. So they've been pushing hard as possible to get inventory back as fast as they can. And I mentioned this a while ago when we first started talking about it over 6 months ago. I think I may have commented to you about it, but when everybody's talking about the inflation aspect of things, but what happens when all these companies, they finally meet back up to the demand, the supply finally meets up to demand, and then the supply is already heading south, the demand's already heading south. So then all of a sudden they have a surplus of all these goods, and then they have to discount them. Look at what Target's doing all of a sudden. So I made a tweet as kind of a joke a while back. It's been a while, about, everybody's worried about inflation, but the deflation we're going to potentially see afterwards is going to be crazy. Because the Fed really worries more so about deflation than inflation. They'd rather have inflation than deflation, simple as that. And so it's
deflation is raising
coming to light now that all these companies we're starting to see it are finally getting their inventories back, finally getting stocked up. And now all of a sudden they're having overstock of certain items and they're having to put them out on discount. And is that gonna help reduce prices going forward? Maybe. It definitely could. But it's something, to see or keep monitoring as we move forward with all this. But going back to the natural gas, where is it? Which hit a record. So exports of goods and services increased 3.5%. Broad increase was led by shipments in industrial supplies and materials, which hit a record high amid rises in exports of natural gas, precious metals, and petroleum products. So we're exporting natural gas probably to help out Europe right now, if I were to guess.
Yeah, they're looking at LNG, and we're an exporter. I did know that we're an exporter of LNG, and so, but that's outside of what they normally take from an oil perspective. But they are taking LNG. I did a story on that. I did a video on that. Man, I did a video on every damn thing that's out there.
you couldn't even draw the line or connect the lines together, man.
Listen, I'm looking at this. I'm looking at this a little differently than you are, bro. I just am. And, but Reuters is, I think, a reputable point of getting news. I say that. It's just, I'm looking at this a little differently because you would think that the market would react a little differently based on this. All right. So that's all. That's all I'm saying. Man, I need to read my post before I post it. Yeah, Dave, stop putting all that spelling crap in there. There it is. Uranium started moving. David sent me on my Twitter the story for uranium. Joey, did you put the video up here for uranium? Joey put it up there too. Hey, Joe, can you find the uranium one? Joey's going to put up the video for uranium up there too. We all agreed with Fed Governor. Oh, heck no. About the transitory thing, yes. But me being a Fed governor, man, I would shut this country down and be like, and start us all over from the beginning, and we'd be fiscal. We would be fiscally right. I'd have to put us through some hurt to hit rock bottom, but I'd make us fiscally right. That's for sure, man. And I think that that's so important that, we just got money going everywhere, which lowers the dollar, which there's so many domino effects going on right now. And listen, put me in there. Y'all might hate me for a couple of years, but then afterwards you'll be like, thank you, Glenn.
New
That's the
T-shirt
way.
idea.
Huh?
Get fiscal with Glenn.
Get fiscal with Glenn. Let's get fiscal. I want to get fiscal. Wow, that was kind of creepy, to say the least. To say the least, that was really kind of creepy. All right. Glenn for Fed 2024. Yeah, that's not happening. So, story that I did recently, yesterday. I like this. What did you have no control? What, did he lose his control?
I didn't touch it.
Oh, okay. Amazon stock split, did a video on it yesterday. Go check it out if you haven't. This is one of the 4 things that I think is important about Amazon after the split. There's 2 things, really. 2 things is, in the story, it says that after a stock splits, it might not have been in this story.
The split effect?
The split effect. Is you going to call it the split? We call it the split effect. The split effect, or the split, was that the S&P reported that after a stock is split, that the stock tends to go up on average 25% over the next 12 months. As opposed, or as if you compare it to a typical S&P stock over a 12-month period, it's about 9%. All right, so if we look at it from that perspective, Amazon has the opportunity to go up 3 times as much as a typical stock in the S&P 500 over the next 12 months. Number 1. Number 2, after the stock split, it fell. Well, the cool thing about this is the sell-off, I think in this case a pullback, means that the stock will be trading at a discount to the sticker price originally envisioned. That will make it easier for the behemoths to gain entry into the Dow Jones Industrial Average. Couple of things there. Those are 2 different points. One point is that the mid-level money managers or big money now have the opportunity to buy into the stock outside of that $2,000 range. Now, a lot of these mid-levels can get in, pushing the stock's price higher. Number 1, as it goes down. Number 2, now that they're out of the 2,000 range, back into the $100 range, being the company that it's been over all of these years, it has a great opportunity to become a Dow 30 stock. Now, the other side of that point is, what stock does the Dow 30 push out to make room for Amazon? I don't have an answer to that, and I don't have the true answer of if the Dow is looking at Amazon as a Dow 30 stock. So I'm putting, those are a couple of things that came out of the video that you need to go look at. It was put out yesterday, 4 reasons why the stock split on Amazon was a good thing. How many of you watched it? Type of 1. How many of you ain't watched it? Type of 2. How about
So while
that?
we're waiting on those,
Yeah.
I talked about it in the Jockey Club yesterday, and I want to hear your thoughts on it though. You know, you read a lot of these statistics, and all of them are basically from 2009 till now. We've been in a bull market that whole point. So yes, stock splits historically over the last 10 years have indicated that, you know, the stock split effect is true and the stock rises after that point, but that was in different market conditions. So if you're going to take the bearish stance of, yeah, we're in a recession, if you're going with that mindset, you know, will it still have that same effect right now? And this is going to set precedents for what happens with Google, what happens with Tesla when they split. You know, what if
both of them are going to split? They put out there. Tesla hasn't put out a ratio or a date. Google, I think, put out a ratio. I think they're also doing a 20-for-1.
But even though they're cheaper, though, if everybody's fearful of getting into the market, will people see that opportunity and still take it? Or will they stay away and say, I'll wait till the recession's over, then find it when it's even cheaper than it is now after the split, and then wait to buy it at that point?
I'm going to talk about it. That's one of my stocks for this week, so I'm going to talk about it.
So just the other side of the coin, I thought was,
and there's nothing wrong with that, man. That's why we talk. That's why we sit here and talk. Absolutely.
Some people don't get that.
Tyree says, I'm rolling with Google when it splits. I hear you. All right, I hear you. And Michael, we'll try to take a look at that stock. All right. Now, a couple of things that Amazon, and we actually put out on our Twitter that we we not predicted, but it wasn't a surprise to us that Amazon split, and we gave it a sell recommendation the whole 9 yards. It's lost a lot. It's gone down a lot, but I think that doing this split is trying to help the bottom line, in regards to trying to get it back up to where it used to be, bringing new blood into the fray. But Patrick is right. If we're in a recession, do we buy it now or do we wait until after the recession? I think we will. It's got a relative value below one, but a relative safety above one, which means the company makes money. All right, it's probably not making as much as the street thinks it should, but it's making money, and they're still growing their earnings. Not as lovely as I'd like it to be, but you know what the big thing for me with Amazon is? If I take away everything, Amazon is the number one online merchant. Who else is going to knock them off their perch? Okay, that's big for me. All right, and does it get back to where it used to be, even on a split adjusted basis? I don't know. But again, in the video, I gave 4 reasons why it was a good thing. In any company, especially when it's not doing good, any company that does or puts forth actions to do better, especially if they know that they're not doing better, is a company I want to invest in. A company that's willing to pivot, like GME did. GME was poopy. It was straight poopy. What did they do? They did the things to make them into a viable company. What did AMC do? They didn't do as much as GME, but they did what they needed to do.
No, please answer that question. What have they done?
Listen, I am answering. So they've done things. They've bought more theaters. Okay. They're taking crypto. There's, that's all that kind of stuff. You getting into the crypto crap too with NFTs. AMC just did a little different by accepting crypto. All right, so I think that both companies did what they needed to do to pivot. I'm thinking that Amazon right now is doing what they did to pivot. What did Radio Shack do? Kirby. Radio Shack was the biggest. They didn't pivot. What did they do?
They didn't have time to pivot.
And they got shut down quick.
Were already at 0 by the time they even tried to. They could have even done.
They didn't pivot, man. They didn't do anything. And even though they didn't have the time to do it, they weren't strong enough on what they did have to overcome what happened to them. You know who else is in that same situation?
Still had money available to them, and they still went under.
How about Sears and JCPenney? Why are they still around?
Sears isn't.
JCPenney. Why are they still around?
Is JCPenney still around?
Yeah, it's still around. You can still trade.
I thought they got delisted.
No, go check them. Go check. I think that they still. But this is what the big money does. They go after the companies.
Yeah, JCP is no longer there.
Go check it. Go check. Go put in JCPenney. I think it's traded on a different stock. I think that they're still there, bro. I think so. I could be wrong, but I thought they were. Is he trying?
But they're not a tradable company unless they've merged with somebody or had.
Did that happen recently? Because
I haven't seen JCPenney stock show up in quite a long time. Oh, it may be. I thought it got.
Sears is still around. Sears is still around.
You can't trade that.
Why can't I? Who says I can't trade that?
The SEC, when they changed the rules on these super low stocks.
Dude, they still do they still have volume? They still got volume.
They're basically like ghost stocks.
It's 22 cents. Good. Why is it still around then? That's my question. Why is it still there?
I mean, you could still go to and find Blockbuster stock, but doesn't mean it's an actual company.
You can still it's got a ticker symbol. It's not
traded on the open market. It's traded on like Pink Sheets or penny stock or over the counter. Like it's not a regular stock anymore.
All right.
I don't remember the exact classification off the top of my head, but it's not a regular stock that you can buy anymore.
All right. So that was just a story on Amazon. and it's one of my picks for this week.
So one of the things with that philosophy or that mindset that you're going off of is, what can take out Amazon? What can replace Amazon? Ask yourself, back in the early 90s when AOL 3.0 was around, what was going to take out 1991? What was going to take out Amazon or AOL 3.0? Nothing at the time, but eventually other people came around. When Walmart was the only place to go shopping anymore in the early 2000s, what was going to take that out? Nobody knew it was Amazon until Amazon became what it is today.
Oh, but Walmart is still the biggest brick and mortar store. There's still the brick and mortar.
They've lost a lot of ground, and they're all changing to try to, be more like Amazon now because Amazon's taken so much market share from them.
Mm-hmm.
So it just goes to show that right now there's nothing that you can see that looks like it's going to be, dethroning Amazon. It doesn't mean in, a year, 2 years, so on, that something's not going to pop up that we don't know of currently that could take that out. So,
but as of currently, ain't nothing out there taking it off of its perch right now.
Fair.
So based on that, I still think that it's still a good play to the upside.
Fair enough.
Mark wants to know what the poopy indicator is. Is it technical? It's a gut wrenching. It's a gut indicator. Well, literally. Literally. I didn't think about it until just then. That's literal. All right. You wanted to talk about gold. So I got a story for you for gold. Talk about it.
All right. I haven't seen a story yet, so you can introduce a story and we can talk about gold.
All right. Central banks are increasing gold reserves as inflation, supply chains fears looms. The amount of gold
on for years, though.
Huh?
Central banks have been, well, mainly China and Russia's central banks have been racking up gold for the last 10 years.
Well, here's a graphic. Since and you're right, since 2010, so that's what, 12 years?
Yeah.
All right, but it's still increasing. It's still going up even with what's going on. So that's a story. When was the date on this story? Now you got me thinking. It was 6 hours ago when I did it. So this is a relatively new story.
Does it talk about what central banks have been the main influence for this?
Similarly, World Gold Council recently surveyed central banks and found that 74% reported higher gold holdings as compared to 68% in the previous year. So it's going higher. So yeah, it may be doing it, but I guess the story came out because year over year, it's gone up 6% higher.
Yeah.
Let's go see if there's any stories on which banks. I think it's looking at banks as a whole, bro.
Yeah,
I think it's looking at banks as a whole.
I've seen a lot of stories over the last 10 years or so, that China and Russia have mainly been trying to buy up all the world's gold as much as they can. Because if things hit the fan like another 2007, 2008, the country that survives is going to be the one that has the most gold. And also you peg your dollar to a commodity like gold again, all of a sudden you have a lot of new interest into that currency, which could easily, at that point, if you're looking for a new global reserve currency, the one backed by gold is probably going to have some of the best recommendations for it.
I agree with that.
So
all right.
I think it's interesting that this comes up now.
All right. So I put that as because you have a gold that you're going to be looking at as one of your stocks.
Yep.
Next story for me, grains, wheat. Wheat corn eased back as U.S. crops, Ukraine exports assessed. Going into Ukraine, Ukrainian Agriculture Producers Union, UAC, said Russia stole about 600,000 tons of grain. That's a lot of grain. That's a lot of grain right there.
And that's what they can find. That's what they know of.
That's what they know of from the occupied territory of Ukraine, which is going to create a very interesting point. Who buys that? After you done stole it from Ukraine, who buys it?
Well, they put it on these ghost shippers like Iran has done, and they ship it to other countries, and they just take the labels off of it so they don't know it's coming from Russia.
So where's it coming? You don't ever ask and say, where's this coming from?
Well, no, it's the same reason. It's the same way if you haven't read about it.
And I haven't.
look up the ghost shippers, I think they're called, but it's what Iran's been doing for years to bypass what's it called? Why can't I think of the term?
I don't know, because you
The
need you
restrictions, the
need
laws, or
Prevagen.
the sanctions against them.
Okay.
Basically, these big shipping boats, they change their flags every so often. They change yeah, thank you there, Mark. But yeah, they change their flags, they change
You see
call
what
signs, everything, and they
you,
don't have any identifiers on them.
you see
And
what
so that
Sonny
way they,
said?
huh?
That's what it says. That's pretty much that's what Iran is doing.
Yeah. And they've offered, well, Iran's offered it to, or offered their help to Russia to import or to do oil trade and also grain trade, everything. They're offering them freighters to be able to do that.
All right. So now with the possible influx of shortage of grain, OSU or Oklahoma State University on the forefront of developing higher quality wheat. I don't know how I feel about that. It's going to be some genetically modified stuff. I don't know how I feel about that. But will it be able to overcome what we've got going on with wheat? That's a good thing. The other side of it is I don't know what I'm eating. So what do you think? I think that this is at least going after the problem of the wheat shortage. So I like that. I like that that's an answer, not an issue. It's like, listen, we're going to go after it. This is what we're going to do. What do you think?
I mean, that's good that they're trying to use GMOs to fix it, but look at what they did when they made GMOs for sugar. Everybody got fat.
Yeah, Joey.
I mean, you look at what, yeah, I mean, humans can try to recreate stuff. That's great, but it's never going to be the same as the original. So it's good and it'll probably fix the issues, but there's probably going to become some side effects that we'll see 5-10 years down the road that people aren't going to be too happy with.
I don't doubt you. I still think that wheat's a good place to have your money right now with the shortage.
I agree. And I think when the shortage actually starts hitting the markets, it's going to add a new move to the market that we haven't seen in quite a long time. Everybody thought the shock when we saw oil prices starting to skyrocket was crazy. It's going to be interesting to see what happens when the wheat shortage hits the markets.
I agree. And the last story we have today is XROF. That's your deal. Talk about it, bro. Woo!
Yeah.
XROF, baby.
So for anybody who doesn't know, anybody tuning in for the first time, we've been talking about XRO technologies for quite a long time. Pretty much everybody here in the education department holds it in their portfolio. And this is just a new upgrade information coming out from 8 Capital. Talks about, the new partnerships that they have that they've already announced. Also about potentially new partnerships that haven't been announced, but that are already, already been developed. Also talking about how they had their first sales finally, which is something I've mentioned for quite a while that we need to see. Obviously, it's more of a gesture, more so than anything substantial. But it's a good sign to see that they are at least, having some sales starting to hit their books now. Hold on, let me make this bigger so everybody can see it. There we go.
Holy crap, you made it super big.
Well, look at the screen. It's kind of hard to read for everybody out there.
That's true.
Also, it does I like this because not only does it talk about the positives, but it also does discuss the potential risks involved with EV stocks or electric vehicle stocks in general. With supply chain issues, the volatility in the markets, all of that could be a hurdle or, a headwind for XRO. But the fact that they are starting to produce, they're starting to actually get some major development started. They give a price target of 6, which right now it's trading at a little over $1, about $1.17.
Is that 6 Canadian or 6 US?
I believe
scroll up to the
Canadian.
I think it was 6 Canadian. Target 6. Yeah, because
right here, company data, last share price is 140. Yeah.
Okay.
So yeah, Canadian. So I mean, I guess that's what, about $5 US.
I thought it was going to be higher than that. The Canadian trades a lot lower than the U.S., right?
I was joking.
Oh,
But yeah, it's
I hate
gonna.
you.
But that definitely is a nice sign to see. One of the things it talks about is it uses their expected earnings per share from 2025 when they come up with their estimates here, the revenue estimates. So they have, how everything is based upon, or how based upon the way they calculate it. They go over their calculations, how they calculated all that, and I agree with it. It's a nice boost, and it's a realistic view of the stock as well. It's not just a fluff article or a hit piece. It's a realistic view of Extro that I thought was an interesting read.
All right. So that's one of Patrick's stocks he's going to pick this week as well.
Mm-hmm.
All right, let's go get into the software. Let's go see what's going on with the indices real time. That's the market today, baby. Everything is down. The Dow hit a high at about 12 o'clock. The S&P hit a high earlier this morning at about 9:55. So did the VectorVest Composite, about 9:55. In the Qs, the NASDAQ about 9:55. But the Dow
everything seemed to dump around 12 today.
Let's go see.
Everything took a sharp dive right around.
I thought you were going to say the word. I haven't
been able to find a reasoning for it.
I thought you were so going to say the word. You said it took a sharp dive.
It took a sharp decline.
There it is, about 1220 on the Dow, about 1140 on the Qs, about 1140 on the Spiders, about 1205 on the VVC. But you're right, I haven't heard any news. S. McClintock said it was lunch. I didn't hear any news that pushed the market down as much as it's going down. This is intraday 5-minute bars today, folks. All right.
That's silly. Computers don't eat.
Sure they do. my computer eats. It sure does. Look at all of the crumbs in my computer on my keyboard. My computer eats, right, Joey? It pretty much eats. All right. Let's go to the viewers tab. We did all the market news. Let's do this real quick. Let's see what sectors are moving. Let's go. Do I have this on YouTube? I do. I don't. Let's go to Delta searches sectors. That's what I have. Let's go see what's moving. So I did a little different thing than just the 10-day price delta. I did the 10-day price delta, but that the sector has to have been moving up for the last 20 days. And then I'm looking for the stocks that are moving up even more over the last 10 days, like internet. Over the last 20 days, by price, it's up 8.25%. Over the last 10 days, it's up over 13.5%. Petroleum, interesting, it's slowing down. Up 23% over the last 20 days, only up 13%. That's interesting, and that goes back a little bit to what Patrick was just talking about with oil. Interesting. This backs that up a little bit, that it's not as strong. Right? Apparel, up 8% over the last 20 days, up 11% over the last 10 days. The biggest jump I see is about a 5% move, and that's on internet. Let's go view the stocks in that sector. And because many of you are not subscribers to the VectorVest software, we're going to look at the top 5. Look at that. Look what's up there. Google, Facebook, Bumble, Google, Pinduoduo. Some of the facile. What we did is we looked at the sectors that were up at least positive in the last 20 days and going up even more, in this case, going up even more in the last 10 days. And here's some stocks for you to take a look at. You got anything you want to add to that?
Stocks in the internet sector. How is Bumble? I mean, I guess I see it, but how is Bumble in the top of the list? Isn't Bumble that dating app?
Yep. Why is it up at the top of the list? Because by VST.
Well, I get that.
1.2. Positive earnings, growing it by double-digit clips, doesn't pay a dividend. None of these pay a dividend.
Well, I mean, I guess it's RT really holding the whole thing higher right now.
That is it, because technically it's not fundamentally sound. Whereas Google and Facebook are, Pinduoduo is not fundamentally nor is Bumble. It is that the stock is moving up as much as it is.
Holy cow.
Let's go take a look. It's probably got some news behind it, bro. Let's go put on the last 3 months.
I mean, it has to.
Yeah,
because
wow,
I did a video on it before for the IPO.
Where's the
and
IPO?
Stock wasn't doing anything and except going down. It was.
There's the IPO.
Okay. Yeah. I mean, I gave a bearish stance on it before it IPO'd. I think that played out right. So if anybody was doubting my picks, there's a bearish stance I gave.
Yeah, someone did. Someone was doubting your pick, but yeah, it definitely did move. It bumped up, leveled out, came down some more. Looks like it's starting to run again, but I'm not feeling the earnings on it. All right, so that was just a process to look at what is out there from a sector perspective. Did I close 7? I did not have. All right, let's go back. What's next on the list? Customer picks. I'm going to type in some of the stocks that I've seen you type in today. LEU, UN.
Well, let's use that for next week.
You want to do that for next week?
Yeah, because remember we talked about that. So for anybody who's get everybody on board, we're going to start a community post on our YouTube page. And so starting after today, we're going to have it up there. If you guys want to put in your stocks that you want to see analyzed and talked about, go to that community post, look for that here soon, and put in your stocks that you want to see, and we'll start getting a list comprised together.
But the only way I put these stocks in is from that community post, not here. Not here.
We're not taking stocks from viewer requests. We're taking stocks that are entered into the community post.
That gives us time to get some stories behind it to either like it or dislike it.
Yeah.
All right.
Because Glenn's not good at shooting from the hip. He's too old for that.
We'll probably take about 2 to 3 per person. So, you know, Patrick may do 2 or 3, or I may, or we'll both do about 2 or 3. All right. Glenn's picks. This is from last week. Let's see how they fared out. Let's go back 1 week. All right. Let's go back 1 week. Let's see how these stocks fared out. These were my stock picks from last week. Let's quick test them. Psych! I did crap. So TNXP, I was kind of upbeat on that, and
now you're bullish on rope?
It went down 30%. Huh?
Nothing.
I hate you. All right. And let's go to Patrick's picks from last week. Let's do a quick test. Wow, not as bad as mine, but down.
Hey, at least I had a winner.
Yeah, at least you did. GME,
and
look at
also,
that.
remember, BKSY was not one to jump on board with right away. It was one to keep on your radar. So I don't count that one. Overall, I'm positive.
I count it because it's down, so I count it. You picked it.
I wasn't get into that yet.
I shut you down. You picked it, damn it. All right, let's go.
Man, you were trying to get us demonetized today, aren't you?
All right, let's go look at the stocks that I've got for this week. Because I'm still big on oil, I got San Juan Basin. I got USO. There was a story. I guess I missed it. There was a story on Tesla linking up with a battery producer in China. I don't know where the story went. It should have been up there, but it wasn't. I got Tesla picked for this week because of that battery shortage or battery link up. Wheat, I still think is a good spot to be in, and Amazon. Those are my stock picks for this week. Let's go take a look at their graphs real quick. View the stock graph. Let's go put these on a 3-month graph. San Juan Basin has been in my portfolio and kicking butt. Look at that. And it's relatively cheap in the space. This stock has been in my portfolio and making me money. All right. And again, Dan, any stock that you want us to take a look at, my friend, when I put up the community post after this, I'm going to go put up the community post. You guys feel free to put whatever stocks you want in there, okay? So I like San Juan Basin. I still own it. I'm making money in it.
I like this too.
Huh?
I've liked this one since it became a top BSC stock.
Monica, JCPenney, now a private company. I just saw that just now, Monica. Sorry about that. So it's a private company. That's why. All right. Thank you for that, Monica. Tesla. This was a news-driven story. Let's go see what happens with it. A lot of the issues that have happened with Tesla right now is because Shanghai got closed down, but I think it's opened back up. But look at the earnings per share on it. I'd like to see it break through both these levels of resistance before I take a bite of the take a bite out of it, or at least get above this 20-day exponential moving average. USO oil, just man, both of those. If you don't want to play an individual stock like San Juan Basin, you can play the whole space, USO. What else do I have? Wheat, and wheat's been pretty choppy lately. I still think that, as Patrick said and agreed with, once this hits the United States, I don't think this has really, really hit the United States yet. And it's still relatively cheap to go. You can buy it. I think that it's got the probability to really, really go up a lot. Amazon, the split, I still feel that it's a healthy thing for the stock. It's now trading at 121. Just for the point of transparency, I got into it the day before, the day of the split. All right, I got into it the day of the split, and we'll see what happens. Currently, even on a little bit of a pullback, is still above the 20-day exponential moving average.
Did it really form an inverted hammer on the split day?
I'm not going to. That's not a true hammer because it didn't finish at the bottom.
It's kind of hard to tell on my end, so that's why I was.
Now let me zoom in a little bit. There it is. I think that that's a shooting star with some follow through. So it could be a possible reversal that happened on the day of the split. Open candle yesterday showed that it went down, but it rebounded to open up the candle. Today it's falling and the candle is solid. The volume is not as strong as well. So I'm thinking that even on this little pullback, that it's not a lot. Shut up, Joey. That is not a lot of conviction on the move. So Joey is messing with me. I'm gonna pause in the middle of this, and I'm gonna physically accost you. All right. We can't get it on camera. Actually, we're on the camera. No,
for the you right there. I got my phone ready. Let's go.
Wow. All right. Here's Patrick's picks going into the week.
All right. So some of my picks, well, 3 of them are basically the same thing, but 3 different ways of looking at it. With interest rates on the rise, and we know home sales, new home mortgage, or new home applications are all declining quickly. We're also seeing housing prices dropping across the country, left, right, and center. My wife actually mentioned it to me when I was talking to her not last weekend, the weekend before, about how, housing prices look like they're getting ready to start declining. And she mentioned that, for the first time, I noticed on Zillow the other day that it actually has a reduction number next to a lot of the houses that she was looking at. She's constantly on there on Zillow, checking out home prices and everything around the area. And she even commented that, she's seeing houses now more so than ever showing, reduced prices, which is something you haven't seen in 5 years.
Are you going to see a buyer's market real quick? Just
possibly.
Okay.
But it's not that the demand isn't there. It's just that nobody wants to take these rates, and everybody's willing to bet that the Fed's not going to continue to raise these rates forever, and that these rates are going to go down in the near future. Just like they did, 2018, the last time they tried to raise rates. So to take advantage of that, if they're gonna basically burn the housing market down, just because they want to lower inflation, DHI is one of the best performers from the housing developers. And so the RT just crossed below 1. If you're looking for an individual stock to buy puts on, this one would definitely be it if you're looking to play the down market and the housing market. Then I also came up with 2 ETFs. One of them I got into a while back in the Jockey Club, got stopped out, just moved sideways, never really went anywhere. That was SRS. And then that's a 2 times contra ETF on the real estate markets. And then DRV is a 3-time leverage contra ETF on the real estate markets. I've checked both of these have good volume for them. Let's see where you have it listed. Average volume for the triple is 280,000 a day, or 50-day moving average. The double is 175,000. So both of them over 100,000 average volume. So if you're looking to play the housing market to the downside, you want to play the broad market moves. SRS or DRV are 2 easy ways to take advantage of that. If you're interested in options, looking to play it to the downside on an individual stock, DHI was my personal favorite from the list that I looked at. Taking a look at the graph of these real fast. Let's go. Do you have my layout in here?
Yeah, keep looking. Keep looking. Oh, crap. There is one. That's not.
You say there's one.
There is one.
I don't think you know what that term means.
I don't think that term means
There's
what you
not.
think
There's
it is.
not one in here.
Move. Stop touching it.
I just went through it.
Yeah.
And I'm waiting for. Oh yeah, you're right. Wait for it, folks. Wait for it.
Crap. Oh yeah, you're right.
Yes.
All right. Go make your own. You can make one. You can do it on
It's
the fly.
fine. I'll just do this. Give me control of the mouse again. Easy enough. Enhance. Where's the enhance? There it is. All right. So looking at the enhanced layout, let's zoom out 6 months. Let's go 1 year. So looking at it here, actually, I want to put it on a 5-year basis even. So 5-year levels I'd be keeping an eye on. 1, all the way down to pre-pandemic levels, right around, what is that, 62?
62.15. Yeah.
You can see we hit that, bounced off of that support floor, and now stalling out. So where do we look from here? I look at these new lows, or these lows from after the pandemic of around 20 a share. It's trading at 70, what is that, 73?
Yeah, that could be, if that goes to the downside, that could be a great
That is, I mean, even if you wait for it to break that 62 resist or support floor, 62 to 20, that's a pretty substantial move. So I like this aspect of it. Home builders are going to be slowing down if nobody's buying homes, especially, if the foreclosure rate starts increasing, because
that's
all
going
the
to be a
houses that were
big
in
number.
forbearance.
Looking at the foreclosure rate's going to be big.
Yeah, and I mean, all the houses that were in forbearance over COVID, and the fact that we're seeing, we talked about last week, people's personal savings declining. We're seeing credit skyrocketing, or consumer credit hitting a new high. People are tapping out of all their credit lines and all their money that they can get access to. And so next thing to go is houses. Once houses go out, they get foreclosed on. All of a sudden, there's a huge inventory. There's no need to be buying or building a lot of houses. So therefore, builders slow down. Take advantage of that. DHI is the #1 builder that I was looking at for that kind of a play. So that one is, for the individual stock wise. But then if you're looking for the triple, you have DRV. I'm going to take off the envelopes here. DRV. Been steadily declining. MACD has been increasing. DPO has been increasing over the last few years, giving you a bullish divergence on a long-term basis. And especially with it, off of these lows as of recently, from a long-term perspective, you could see some nice upside here for where or from these current levels. And then if you're not as aggressive, you don't want to do the triple, obviously want to give another option for SRS. These would be more of that longer, well, not longer term, not like years holding, but for at least 6 months, maybe even a year, maybe even a year and a half until the end of 2023, or until we start seeing conditions improving. But yeah, this could definitely be a great tool to use if you're looking to take advantage of, the housing slowdown. These could definitely be some great avenues to look at. So those are my first 3 to give everybody a little bit some different options out there. The next 2, Nugget, and then the third one, Extro. We'll go ahead, graph these as well. So Nugget, as you can see, RT is below 1. So therefore it has been in decline. It is in a decline currently, but let's go look at the graph together because this is where things start really getting interesting. Put it on a 6-month. So looking at a 6-month here, you've been in a steady decline. You have these gap downs off of these most recent highs. Where is that? Right around the middle of April. Well, as we talk about in the Jockey Club, gaps tend to fill roughly about 90% of the time based off the studies that I've seen and I've read about. Based off of that, you have this gap. Well, actually, let's use this here. You have this gap that needs to be filled here all the way at 55. It's currently trading at 48. That's a $7 move on a $48 stock. What is that? I'd have to do the math, but it's not a bad day's work right there. Well, looking even higher, if we can get to this consolidation zone, then we have these gaps up here at 65, and then at, what is that?
That is close price, 64.91.
So there you go. You have a lot of, okay, yeah, close is 69. Yeah, oh, I thought you said
That's
64.
what I said.
Well, you're sitting back relaxing. I need to hear you.
Sorry.
But yeah, 69.41. So from 48 to 69, that's a pretty decent move. So you have some gaps on the upside that need filled. With all the worries about, everything going on in the market. If you're worried about recessions, if you're worried about the dollar, if you're worried about what's going on overseas, commodity prices, you name it. This is the old school traditional play on recession fears. It hasn't really done a whole lot as of late. And with its most recent pullback and some upside gaps that need filled, this could be an interesting one to look for, especially with this new uptrend starting to form. Use a trend line, connect these lows here, and let the trend line be your guide. As long as it stays above your trend line, that means it's making you money.
I said to Patrick, that this was a gutsy play right here.
And it is. And it's a definitely a bottom fishing style of a play. I will say that. It's beaten up, but if you're really heart set on what's going on in the current markets and you're not comfortable with it, and you want to have some way of hedging yourself for that, right now, probably best time as ever, you're going to see these prices. Also on a longer term basis, on a 1 year, you had hit, man, that's really bright in the background. You did hit that official low. When is that? December 15th. And then even on this most recent pullback, granted, technically it's not officially over on this pullback, but you are at a potentially higher low. As we know, higher lows tend to lead to higher highs. So you have that bullish sign there as well. And then XRO, we can talk about the graph. XRO, realistically, one of the things I have been keeping an eye on, and I talk about this in the Jockey Club a lot, but putting on volume, taking this stuff off. There we go. On this most recent sideways move, there's been some huge spikes in volume and price really hasn't moved a whole lot. So it's in this really tight channel. One of the things we look at, especially when we do some of the day trades in the Jockey Club, is capitulation or accumulation phases. With all the big news that could potentially be coming from XRO in the next 6 to 9 months, roughly, we could be seeing big money accumulating it here at these low levels at around $1 a share, knowing what's to potentially come. So I like seeing that, but once again, only way I'd be willing to jump on board quite yet is when we break out of this sideways channel that we're in. So realistically, I can't read that, but $1.25 roughly, if I'm
125.
Right?
Yeah.
$1.25 on the low end and about 95 cents to $1 on the high end. So we need to see it break the upper part of that sideways move before really jumping on board with it. But with bigger buying volume, especially in the last few weeks, let's go 3 months, 6 months. Let's see, where does it show it? But yeah, with bigger buying volume coming in over the last couple of weeks, that could definitely, increase that even more. Or give more credence to potentially accumulation phases going on right now in XRO. So I like the signs, but once again, as always, you got to have a plan in place and wait for that confirmation or wait for that trade to develop. Don't go trying to, predict it early. Wait for the trade to come to you. Thoughts?
All right. Quick again for all of the stocks that are coming in. Again, after this live stream, I'm going to go right to the community tab and give you a place where you can put in your stocks for us to look at next week. Monica wants to look at the portfolio, the Bahamas portfolio. Let's go check it out. Go to my portfolios. There's the Bahamas trip, $10,000 portfolio. Oh, it's only up about a little bit. That's about it. All right,
It's
so this
taking
is
a big hit today.
yeah. What is this? Oops, what is this looking at? Details. This is looking at cheap stocks. What I use on midday market, cheap stocks, rising business sectors, stocks that I use as my speculative picks are what's in here. It's still in the positive, but not by much. Bahamas trip to wow, 15%. 15%, Monica. Look at that. And this one is using Chappell's Champs. Ballistic goes ballistics. So this is fully automated with the Profit Locker Pro. On the downside, it sells short. It's using the JLB RT kicker. And this portfolio, since we started it in April 4th, May, June, 2 months. 2 months, we're up 14.85%. DHI is a short, Stephanie. Yes.
Correct. Yeah.
DHI is a short. John says, can't even buy a Bahama Mama. You can't. Dude, that's $1,483. What kind of Bahama Mama drink you got?
We're going to have some fun tonight.
Here we are. So that's the Bahamas trip two different portfolios. My cheap long-term stocks. Again, this is what I use as far as my speculative plays on midday market since the beginning of this year, up 21%. All right. We were talking about uranium stocks. They ain't looking so good. It's down 10%, but recently on the run right now to the upside. Recently on the run to the upside. Growth stocks from 2/7 of 2022. There's my growth stocks. GTE. Somebody wanted to know about GTE. Where we're in it, we're up 89%. 89%. So, and value stocks for this year, the same date, value stocks, not nearly as good. Pete, so far this year has been more of a growth play than value play.
That's
so
crazy
far,
to me.
Say again?
That's crazy to me.
I don't, and listen, the numbers are there. The
I
growth,
get it, yeah.
It's been a growth stock play more so than a value play, picking out on the same date. February 7th of 2022. All right, so there's the Bahamas trip. Looks like the Bahamas trip 2 is making us some money. We just made about $1,500 to go on our Bahamas trip based on a $10,000 portfolio. Ooh-wee! There you go, Monica. All right, we're done. Patrick, you want to close this out today?
Yeah. Hey, Jim, hold on one second. I have one last thing I want to do because I saw an email come. Jim, was that from you earlier today? Wait, go back to the screen, Joey, showing VectorVest. And I don't think, okay, there we go. All right. So Jim, to answer your question, it's kind of hard to type up in an email. I've been trying to think of how I could respond back, but if you're here right now, I can show you this. So to answer, he was asking for, more of a color. He's more somebody who learns visually. And I like that, I get that. If you're somebody who learns visually and wanting to see kind of like the color gauges or the changes that we notice with all of our key indicators, rather than just, the price, the RT, the buy to sell ratio, kind of seeing the changes that you see here, but on individual stocks, isn't the exact fix for what you're looking for, but as close as possible for right now. When you right click on a stock, you get, where's view historical data. You can pull that up on any stock out there. I'm gonna need somebody to pull that over.
Let me get it.
And then this is looking at an intraday right now. And as you can see, it gives you all the different values. You can see all the values of RV, RS, RT, all of that there. You can change that to end of day as well. So you can get the daily changes and you can look at the trends and the changes of these over time. Now, I know you're not going to be able to export the data, but if you wanted to try to put it into your own PDF or own Excel spreadsheet, color code it that way, you could definitely do so. Not the exact thing you're looking for, but just, something for right now to potentially help you out. Hopefully that fixes what you were looking for, or helps, at least give you something to play around with there.
How many likes do we have today, Joey?
So that's going to be it, though. Thank you all for hanging out. Don't forget, as always, tomorrow we have new mobile update video coming out, or new mobile update during our stream that we're going to be talking about at 11 a.m. Eastern. And then we also have Glenn talking about what's hot, what's not, with Trending Thursday at 2 p.m. So make sure to come out and hang out with us for those. They're going to be some good times. Get your questions answered and get to maybe see Glenn sing a little bit if he does that maybe tomorrow. But yeah, it's always a good time. So come out and hang out with us, show support for the channel, especially if you guys are enjoying yourselves here. So on that note, it's been my pleasure being with you guys today. Thank you all for tuning in. You know, to say it nicely, you got to have haters. From the words of Cat Williams, you got to have haters. So I'm willing to accept it. Glenn, do you want to say anything?
Yeah, you gotta have haters. Hey, it's been our pleasure to be here. Love these Wednesday sections when we can both get together. We both do our own things on Monday, Tuesday, you know, all that. But Wednesdays is a good day when we get to come together and we get to bounce ideas off each other in front of you. So thank
All
you
right,
guys, Glenn.
so that's going to be it
See you
from
soon.
Glenn. Thank you, Glenn. All right, so thank you all for hanging out with us today. Hopefully you guys have enjoyed yourselves. If you have, make sure, as always, smash that like button, subscribe if you're not already subscribed. And until next time, toodles.
See ya.